But the coin that I added to the portfolio today is called vEmpire.
And they are the largest decentralized metaverse investment organization in the world.
Hello, everybody. What a lovely day it is. Let you kick off. And I'll do some button tapping in the background. You know what comes after Ruby and Qcoin? When Binance. Cool. What a day already, eh? CPI coming out, 9.1. I think that was about 0.3 above expectations. Not sure how the market's going to react, to be honest. It's a bad news is good news market. So could go either way. Obviously, the immediate effect was we had a massive drop, but yeah, we're going to have to see where it lands. I think there's a 21% chance of 100 basis points, 1% hike now. But yes, today we've got a very interesting guest starting up from HoT DAO, stablecoin backed by real life assets, which obviously everybody is very keen on any sort of risk mitigation, especially with stablecoins recently. So we can bring out our guest for today.
Hi there.
There you go. How are you?
Yeah, good, thank you. Good. Bit warm. My normal place to come for doing talks like this. The aircon is down, I'm afraid. So apologies for my appearance. But yeah, how are you?
Yeah, I'm good. If you have to give yourself a dab at any point, don't worry about it. So you came prepared. But yeah, how is everything besides business-wise?
Yeah. I mean, it's going well. I'm, part of the reason why I'm sort of in this place now, sort of halfway house, is because there is so much going on. We're right in the middle of our seed round. So, as anyone out there who's raised money, as you guys even have been through, it's very all over the place. You've got to meet the timetables of some very busy people. So. Yeah, it's good, and after this, actually, just a little plug. I'm going to the House of Lords for the all-party parliamentary group on metaverse and Web 3.0. So hopefully, some very interesting opinions coming across.
Tell you what, I actually think I was invited to that.
Oh dear.
Is that with? Do you know Artsect DAO? Miki, Miki, he invited me and I deleted it from my... Oh no, this was yesterday. Don't worry, yeah, no, I'm getting confused there.
No worries.
I was invited to something yesterday. But yeah, don't worry. Do you want to introduce the project and yourself, sort of background to you both?
Yeah, sure. So my name is Divyan Kandaya. I'm co-founder and COO of HoT DAO. My background has been in traditional finance. So I worked as a stockbroker, moving to wealth management. Then after that, moved to real estate private equity, and having a knowledge of how slow things move in the centralized sector. Across both finance and real estate, I just thought there was a huge gap in the market for this sort of thing, where you're sort of able to take real assets and put them in a collateral pool. Obviously, we're not doing anything new in terms of having a collateral pool and minting a stable coin, but we're seemingly the first to take property, representative value and rights, and be able to put that into a collateral pool, and from that mint our stable coin. So moving from traditional finance across into the blockchain, but then taking what I knew and the sort of difficulties of what I knew for that previous area and applying it in with the sort of the freedom that blockchain brings.
Sounds like you're doing my intro. That's my line. I was a stockbroker and I moved into wealth management. My last job was in, I always say my last job was in private equity, but not the interesting stuff. I worked with asset-backed stuff. Word for word, that was my intro.
Hijacked.
Fair enough. I mean, so obviously we spoke yesterday and we chatted a bit, and I know that there's multiple elements to the protocol itself. Obviously, a lot of people think of a backed stable coin as backed by like treasury bonds in Tether's case, or other assets like in Doc Luna's case. So with everyone a little bit more tetchy, let's say, on stable coins and that sort of backing, what separates you apart from the bad stories that people might associate now with that sort of new and upcoming project in that area?
Yeah, sure. That's essentially, that's what I touched upon a little bit in my intro. We're making the effort to actually take real world assets, something that is physical, has a value determined by a sector which has been around for sort of hundreds of years, and the way they determine value is a very precise process. So when we've got the bricks and mortar, we can put that within a collateral pool and then mint the stable coin for that value. But then also and this is sort of no offense to people that do have Ethereum DAOs, and when you've got collateral that does vary in price, by significant value. Our assets have been specifically chosen because they're low volatility. So we've got prime central London real estate is what we're starting with. Even in the worst of the recession, 2008, the prices here they dipped around 14% within the asset class that we are considering. So that was in obviously one of the worst property-based financial crises that we faced. So that's probably the most
that's an intraday move in Bitcoin.
Yeah, exactly. So in terms of using that as a yardstick, it sort of gives us a lot of confidence that even if something really nasty does happen, on the global stage, that the collateral we've got is defensive enough to sort of keep the peg of our stablecoin, at least partly.
Which is leads me on to another question, which is the fact that your stablecoin is not US dollar based.
That's right. Apologies, I'm running around here. So first of all, we saw a big gap in the market for GBP stablecoin because cable, as you well know, Dom, most traded asset, full stop, or the most traded in terms of volume in the world. I think it makes up part of a $6.6 trillion a day FX market.
You need to explain what cable means for the people who don't understand Forex.
Yeah.
Not just in you watching this.
Thanks for the right. Yeah, so cable is just GBP to USD exchange. So you take your sterling and exchange for dollars, but currently there doesn't exist a way to do this on chain. I mean, Binance had a go with GBP stablecoin. I believe there are a handful, none which have sort of made significant strides in actually becoming like a currency, if you will. But there are plenty on the US dollar side. So we want to bring a really well-backed, stable coin to the arena where, if hopefully we see some of these institutions move across the blockchain, to do their efforts to take advantage of instantaneous transactions, better returns for, or potentially better returns, if you were to sort of hold very large positions on chain prior to converting back to the source currency. So we want to try and take advantage of that, because if we can be the other side of the pair for UST, USDC, and DAI, that would be the dream, to be the proven currency, to be able to absorb a lot of that volume transferring over to the blockchain.
Yeah, I think I'm not sure why it is. Maybe it's just there isn't as much development sort of in the UK. There's definitely a lot of startups and innovation in the UK, but I don't think the actual tech side of it, the developing is there, because I know that in Curve, for example, Curve.v, CRV is the ticker. Their Euro pool is one of their most popular and most incentivized pools, their Euro stablecoin. But yeah, there doesn't really seem to be there certainly is, but not a popular one. Anyways, there's certainly a gap in the market. So you mentioned already about where you want to be in terms of the most popular stablecoin GBP anyway. But what is the roadmap beyond that?
So, as I touched on briefly, I want to see HGBP become a currency. So I don't, initially, obviously, we won't have the liquidity to be able to have GBP to HGBP pools, for example. But as we get a bit bigger, that's where we hope to get to, where it's sort of the big exchanges out there, Coinbase, Binance, they will sort of pair us up with GBP because they see the stability and they see the traded volume being enough in order to be able to sort of allow that. But then one step further from there, we really want to get HGBP to the point where it's a true currency, and that means being accepted for real goods and services. So wherever you are around the world, we want to have merchants that will accept HGBP for real things, for real things that people do and use, every single day.
Fair enough. And I know, again, just like with people not being too familiar with the term cable, so be careful in your answer to this question with words that we're familiar with. How do you protect yourselves if your sort of, collateral is based in real estate? How do you protect yourself from sort of a property crash? So make sure you explain what LTV and stuff is, because that no doubt is part of your answer.
Absolutely right. So so we, first of all, as I mentioned in one of my previous answers, that we select or we have selected an asset class which has historically been very resilient, even in the worst of the property crash in 2008. This particular asset class only fell as a whole around 14%, which is pretty good going through that. So that's the first thing. We choose a specifically non-volatile asset class. But then also we follow some of the principle that was really laid down by HoT DAO, which is over collateralization. So for every certain amount of HGBP that exists, there will exist more than that in terms of value, in terms of property value within the DAO. So if something was to go very bad, and say there was a slip in the price of the underlying collateral by X%, then we hopefully, we feel we are very well placed in that our LTV, i.e. the maximum you can borrow in HGBP versus the total value of the collateral you've placed, is such that even for a relatively severe property crash, there will be enough sort of protection for default. So if there was a big wild jump, say 5% down in prices, which for property would be significant. The LTV, if we offered loan to value, which is the amount of currency that we're offering against the value of the property, say we offered that at 60%. So the property is worth 10 million, and we've got a 60% LTV. So we've given out 6 million HGBP. Even if we see the value of the underlying collateral fall by 5% to 9.5 million, in terms of valuation, that person is still, very comfortably over collateralized compared to what they borrowed. So, essentially what we're saying there is that if the property price fell by 40%, which is just completely unheard of, I think there'll be a hell of a lot more wrong with the world that you want to sort out immediately than your stablecoin loan, if that was to be the case. But even then, you would have sort of a 1-to-1 collateral ratio, which is risky, but it's not the end of the world. And as I said, there'd be far worse things happening if there was a 40% crash in property values.
Definitely. But stablecoin isn't just the only token of HoT DAO. Do you want to talk a bit more about the
Absolutely.
governance token?
I'm very pleased to. So the HoT token is the governance token. So I'm not sure in terms of the makeup of your listeners, but many protocols out there that have a stablecoin plus a governance token. The stablecoin you could see as the kind of product of the DAO. So it's what we sell basically, HGBP, our stablecoin. But the HoT token you could kind of see as shares, equity, but I'd suggest equity enhanced. So normally when you own shares in a company, it gives you the right to vote at AGMs, plus you get the value of that share. And if the business that underlies the share is going very well, then normally sort of efficient market hypothesis says that value will go into the shares and they will increase. But what we have in our token is not only the right to vote in AGMs, but to actually table a vote, no matter who you are. So if you feel like you want to change the DAO in a way which you think is great, but you're not a massive holder, you've in terms of percentage of the total, you can say your piece. You can say your piece to the community, the other holders, and it's merit based. If as a collective they think what he's saying here or what she is saying here, it's really great. We're going to vote. We'd like to push this towards a voting stage because we really believe in what they're saying. So it gives great power to individuals that aren't necessarily huge corporations or ultra high net worth individuals to have their voice heard. So that's one of the sort of powerful tools. And then the value side, obviously, speaks for itself. Just like a share, if you own a HoT token, the way in which value is returned to people that interact with the protocol is via the HoT token.
Fair enough. I think I was waiting for you to finish so that I could ask you a question I thought of on the spot. Instantly forgotten it, of course.
I did say pause briefly, and I was going to say go ahead, but I wasn't sure.
No, that's all right. I'll think of it. If it was important enough, I'll remember it.
Yeah. That's the proverb, isn't it?
Yeah. I mean, to be fair, you're getting in very much at the right time because no doubt, I'm not sure if the latest data has been reported or not in terms of property prices, but I think it's a fairly well held view that we are at a tipping point, at a peak, or at least a lip anyway. I'm not sure when the latest data did come out, but it's certainly going to be a buyer's market again soon, which is a good position to fully hold to. Yesterday, you mentioned about this triple tier peg protection. So I thought might be good to touch on that as well.
Yeah, sure. So thanks. So the peg of HGBP to £1 is enormously important. If that breaks, then or it breaks in a significant degree, then the whole selling point of our product goes down the toilet, because stability is what gets us to those big milestones like partnering with USDT to form completely on-chain FX. So and also being accepted currency for anything, goods and services. So that's critical. So in order to protect that, like you said, we've got a triple tier defense mechanism for the peg. The first thing is the real world assets. So you kind of see that as like the outer rim of peg protection, because we've got physical solid bricks and mortar backing the stability of the coin. Within that, we've got sort of a second ring, like the second tier, to use your expression, and that is the ability for the community to start with the foundation and later the community to manipulate borrowing and staking rates. So, based off of what's happening with supply and demand, you can change factors in order to bring the peg back up if it's too low, or if it's too high, like 105 or whatever, 105 pence. you can manipulate borrowing staking rates to bring that down. At least that's what perfect market hypothesis says. And we've seen plenty of evidence that it does work, which is good. But obviously with that, you're talking about a manual process. You have to initially the foundation be able to do it faster because they're able to say, right, let's manipulate these rates. But later, when there's a community, it's going to be slower. So we need something a bit faster as well, and that's the sort of internal line of protection, the third line of protection, if you will, and that's a seniorage pool. So the governance token on one side within a pool, HGVP on the other side, the stable coin within that pool. And what we'll have the ability to do is manipulate the spread between both of those. And that will enable people to sort of try to condense it down as best as possible to get a more attractive price with us for either one of those, the stable coin or the governance token, by trading an out pool than they would on the open market. And that the way in which the mechanics work within that pool means that, again, according to perfect market hypothesis, the peg should return on HGVP to a £1 level.
Good stuff here. Pegs, everything. This didn't used to be scary words, but they are now. Ever since bloody Do Kwon, ruined it for everyone. We used to love our stable coins. Everything was always so beautifully stable. But yeah. So with obviously the two tokens, you've got HGVP and you've got the HoT token itself. So what? Obviously, governance tokens usually come with some sort of rights, and the HGVP. I presume that sort of two questions in one. So I presume that a property owner can come to the DAO and borrow from you guys in your stable coin rather than a traditional bank or lender.
That's absolutely right. So that's essentially what we are there to take over from, that sort of traditional banking service, which is loaning against collateral. So that's what you said. There's a little step in between. So we've partnered with a company called Token House, which is a UK company, and they have come up with an ingenious way to tokenize real world assets. So by the time the assets get to us, they're in an NFT form. So essentially, it makes the interaction between the collateral and the DAO completely seamless, as if you were locking up ETH. Everything is encoded within the NFT, and most things are, and the stuff that isn't is held in a third-party repository, which can be accessible to us to check that everything is above board. That's kind of one of the huge selling points of us, and I suppose by extension Token House as well, as they form part of the system, is that the seamlessness from property to collateral in a DAO is completely groundbreaking. There's been 18 months of very hard legal and structural work put in to get that solution. So yes, a property owner will come to us, but once they have an NFT, and then they'll be able to deposit, and we sort of give them terms against the value, but we can check that the value is legitimate through various processes which we won't get into now. So yeah, it's a simple. I'm not going to say it's as simple as that, because there are obviously some steps within both sides, the Token House and the HoT side, but it's certainly, as far as trials go, much faster than the traditional CeFi route.
Is there any plan to make it eventually as fully automated and decentralized as something like Aave, where?
Absolutely.
Go on, I'll let you answer.
No, I didn't want to interrupt. I'm sorry. Because you hit the nail on the head there. That is absolutely where we want to get to, that level of automation where what's happening on the KYC AML side, there's still a little bit of what's the word? A little bit of resistance in terms of getting a completely seamless process. I expect that there has to be, because there has to be thorough enough checks. But once technology, and we think it's going to be soon, once technology gets to the point where AML and KYC is just as easy as, signing your name or having a phone take a photo of you, that's when things become really interesting. And then after that, the application of sort of that level of KYC and AML, but on the property itself as well, is where we have made some strides in terms of shortening that process, but there's plenty more to go. And that is something which we are investigating towards getting to a point where we can incorporate a proper solution there. So KYC AML on the person, KYC AML on the property. Once those are smoothed out, then it's going to be even more groundbreaking, and I don't think it's going to be too long.
Yeah, I presume that they'll eventually, in an ideal world, there'll be some sort of physical property token standard, like an ERC 1155 or ERC 721 is for NFTs, but where it's like, a standardized tokenized procedure, like, floors, bedrooms, everything. There's no reason it can't be. But I'm conscious, you got to run to the Lords at some point soon. So we've had a few questions in the comments.
Yes, of course.
First one is just about the chain that you're planning on issuing your stable coin on, or will it be cross-chain?
So it's going to be cross-chain. We've got we're primarily on Ethereum, Polygon, but then we're going to be on AVAX and Binance Smart Chain as well.
Good stuff. What is your thoughts on Tether's potential launch of their pound stablecoin? Guessing theirs isn't over collateralized.
Well, that's the thing. I mean, I think first of all, they would have to convince the market that they have got enough collateral to back USDT in the first place, which, I'm not sure they're going to get to. So, but then they have obviously got the trading record of USDT rather. So, I think in my mind, the trust thing is a bit of an issue, but generally speaking, people can get behind something for a lot less than what would be like a sensible argument. So I guess who knows?
Like the current monetary system.
Yeah, exactly.
That's the thing.
Just print money, and that's just like, oh yeah, we're totally fine with it.
Well, I think people do, say, well, that doesn't exist. Like, it's not real. It's like, well, neither is actual money. It's all about stuff, isn't it? That is if people mistake.
If anything, our money is more legitimate HGPP because there is something to peg it to. Like the amount of printing that goes on in traditional finance now, what's behind it? There's just nothing behind it. Yeah, it's ridiculous. Yeah. I am very sorry. I will have to go, but I've thoroughly enjoyed this conversation. I hope I can do it again soon with you.
No problem at all. Well, thanks for coming on. Good luck with the Lords. Getting the RC standard nailed out.
Yeah, I'll try. I'll say Dom can't make it as well.
Yeah, fair enough.
Invitation.
Depending on. So I'm sorry about yesterday.
I'll pass on the message. And thanks to your listeners as well for listening to me rabble on, and wish you all the best.
No problem at all. Cheers. See you next time.
Speak soon. Cheers. Bye, everyone.